Hello friends, I hope you all are doing well and staying safe at your own place. I, C.A. Pujan Kapadia, welcome you all on my today's lecture on the subject Financial Management. As you all are very well aware, we had started with unit number 1, the name of which is Financial Management Introduction. Under this topic, I had taken several lectures under which we had covered the topics like meaning and definition of financial management, under which I had explained you it is just the combination of two words, that is finance and management. What is finance? It includes any activities with related to funds, which include acquisition of funds, utilization of funds, and management of earnings. Definition basically talks about financial management functions, in which I had taught you three important functions, that was financing function, investing function, and dividend function. Second question was nature of financial management, that is the characteristics under which we are taken care of, like it is a universal activity, it is a continuous process, it is related to all the various disciplines. Third was finance and related disciplines, under which I had explained you how financial management concepts are being used and how the concepts of various subjects like economics, micro and macro, mathematics, accountancy, and other management fields are being used in the calculation of financial concepts. Fourth was scope of financial management, under which I had explained you in detail, like in financing function, what all are the points which are included, in investment functions, what all points are included, and in dividend functions, what all points are included. Next topic that we had covered was goals of financial management, under which I had discussed in detail two important concepts, profit maximization and wealth maximization. And at the end, I had discussed evolution of financial management, under which we have discussed three phases. First was traditional phase, that it started in beginning of 1900 up to 4 decades. Then after, it was a transitional phase which started in early 40s and ended in mid 50s. And the third was, which is still applicable till date, is modern concept. So this is what we have covered till date in all our previous lectures. Today we are going to start with the topic functions of finance. This is a particular slide which is the answer of that particular question. What are the functions of finance? Fine. As you all are very well aware, there are basically three important functions, three important decisions that we are supposed to study as financial functions. The first one is finance decision, second is investment decisions, and third is dividend and liquidity decisions. Now let's look about the topic or the content that we are supposed to study. The first is under financing decision, I am basically focusing upon how much fund is required in my business, from where I am going to get that particular fund, what is the cost of capital at which I am going to take that particular fund. So what I am thinking about is paisa aayega kahan se. That is my finance decision, under which there are three important concepts that we are supposed to study. First is cost of capital decisions, that is you need to determine what is the cost that you are going to pay for the capital you are either investing from your own pocket or you are going to borrow from outside. It may be cost of equity shares, it may be cost of preference shares, it can be cost of loans, debentures, it can be cost of retained earnings. So what you are doing over here is you are well determining what is the cost of the fund that you are going to employ in your business. Second is capital structure, under which you need to set a proper mix, a proper mixture of how much equity should be there, how much debt should be there, how much preference capital should I go for, how much reserve should I use. This all are the basically questions that are discussed upon at the time of determining the capital structure. What we are targeted to do is to determine the optimal capital structure, that is the place at which we are earning highest amount of profit at minimum amount of cost. And the third is leverage decision. As I had explained you previously also, it is basically inclusion of debt in your capital structure in order to increase the earnings of the equity shareholders. I'm again repeating, it is the concept which studies inclusion of debt. Debt is basically borrowed capital, fine, in your entire capital structure. What is the main objective? To increase the wealth of equity shareholders. So this all are the financing decisions. Second comes investment decisions. As I have told you, investment decisions are broadly classified into two types. One is long term and second is short term. The long term decisions are being taken by using the financial concept called capital budgeting. Under capital budgeting, we are going to study several techniques which help us to identify which is the ideal project which is actually profitable and which we should opt for. As a result of which, it is having various techniques like net present value, IRR method, that is internal rate of return, average profit, etc. In short, in capital budgeting, we are going to take long-term decisions mostly with regard to which project we should go for, which fixed assets we are supposed to purchase, because fixed assets is again a long-term asset. And second is working capital decisions, under which we are basically focusing about my day-to-day capital requirement. It can be my cash, it can be related to my receivables or debtors, it can be with regard to my stocks or inventory. So the decisions which are being taken with respect to working capital. What is working capital? Current asset minus current liability. So the decisions which are taken regarding my routine functions, my routine financial needs falls under working capital decisions. So this was about investment decisions. And the third part is dividend and liquidity decisions, under which the first topic which is important is dividend policy. Now, what is dividend policy? Every company should have a particular policy on how it is going to pay its dividend. Like certain company has a stable dividend policy, which means every year they are going to pay same percentage of dividend to their shareholders. Some may have a growth dividend policy, which means every year they are going to grow the percentage of dividend they are paying to their shareholders. In short, they need to determine how much dividend they are supposed to pay, that is the payout ratio, and what is the method, what is the policy of payment of dividend, like stable policy, growth policy, etc. And the second part is retained earnings. It is determining how much you are supposed to retain, how much you are thinking to retain out of your profits so that you could finance your future needs of expansion, growth, development, modernization, etc. As a result of which, this basically talks about how much to retain and how much to pass on to the shareholders. So basically, friends, this is a brief overview on all the type of decisions. If asked in question, you are just supposed to required to explain all the 7 points that I have mentioned in this particular answer. I am just giving you a moment, take a quick view on all the points which are written over here. Well, friends, let's move ahead with the new topic, which is more likely to come in your examination also. The name of the topic is functions or role of a finance manager. You are studying till now what is financial management, but the person who basically does financial management is known as financial manager. So now we are supposed to study what are the functions that a finance manager do. What is the role of the financial manager? Basically, the role of financial manager or the functions of financial manager is divided or classified into two categories. One is as a staff officer and second is as a line officer. First of all, we are going to take the first part, that is as a staff officer. Now, the first question that may arise in your mind is, sir, what is staff officer? Staff officer is basically the role which is assigned being expert in your own field. So it is consulted by the BOD, that is Board of Directors. Now, what is staff officer? Basically, when you are expert in your particular field. For example, finance manager is expert in his own field of financial management. Fine. As a result of which, whensoever board of directors, see, board of directors are the one who are going to take the optimum decisions for running the business. So at the time of taking the decisions, board of directors are definitely going to consult whom? To the financial manager. As a result of which, finance manager as a staff officer advises or consults the board of directors on the following aspects. Now let's see what are the points on which board of directors seeks advice from the staff officer from finance manager. The first point is advisability on launching a new project. Whenever board of directors are having a proposal of launching any new project, they are going to take resort or advice to the finance manager. Why? Because you all are aware, finance manager is expert in three important points: financing, investing, and dividend. Now, new project investment is basically a part of your investment function. As a result of which, they would take resort to finance manager's advice so that he could guide them on particular investment proposal, whether to go for a project, how much amount should be invested, etc. Second is regarding the capitalization of the new project. You are well aware that you want to start a new project, but what is the amount that is required as a capital in order to start that particular project? So you need to estimate that particular capital requirement. Again, for the same purpose, finance manager is being resorted for. Third point is design of capital structure or the leverage decisions. Now you have decided that, for example, you require 1 crore rupees to start in a new project. Now, in this 1 crore rupees, how much you should invest from your own pocket, that is from your equity capital, how much you should borrow from outside, how much reserves you should use. You need to determine a proper capital structure for that particular part. And at the same time, you need to decide the proper debt equity ratio, that is how much outside funds should be used and how much your own funds should be invested. So basically, again, for this particular matter, finance managers helps is been taken for. Next point is at the time of amalgamation, takeover, or any other big business deals like modernization of business, diversification of the business, the role of finance manager is important. Why? Because he is the one who has a proper knowledge regarding financing activities as well as investing activities. So he may suggest whether taking over particular company is going to be profitable or not. He may suggest whether they are having ample funds so that they can invest in that particular business or not. Next point is regarding declaring the dividend or making dividend policy decision. We all know that board of directors declare dividend basically once in a year. It is an annual dividend, and within the year as an interim dividend. What I want to say over here is, you know that dividend is being paid by the company to the shareholders, but what is the right amount, what is the right percentage of dividend you should pay for that particular part also finance manager is being resorted for. And the last part is negotiations with trade union leaders on employees' demands. We all know that where there are a number of workers, there is a trade union. What is trade union basically? You might be aware about the same. It is the representative of the employees. So if employees are having any issues, they are having any demands with regard to better employment facilities, with regard to increase in salary and wages, trade union come up and put their demand in front of the employer. Now in this particular scenario, again, board of directors looks towards the finance manager. Why? Because finance manager has a right idea about what funds are available as of now in the company, what are the funds that are likely to be generated in the near future. By keeping that particular point in mind, finance manager can actually enter into a win-win negotiation situation by ascertaining a proper rate of increase in your wages or salary. As a result of which, all these points are such where the expertise knowledge of finance manager is being used by the board of directors. As a result of which, by giving consultancy or advice on all the 6 points which are mentioned on this particular slide, finance manager functions as a staff officer. I would just like you to request that take a quick overview on this particular slide. Well, I hope you are clear with all the points that I have mentioned over here. So what was this? This was the function of a finance manager as a staff officer, which means he is expert in his own field, as a result of which he is being consulted by the board of directors before taking any of this kind of decisions. Let's move for the second part, that is the functions of finance manager as a line officer. First was staff officer, Here I have written line officer. That is basically as the head of the finance department. In staff officer, he was expert of his field, so his advice was taken off. Here, he is basically the head of the finance department. As a result of which, as a head of finance department, what all are my functions or what is my role, what are my responsibilities, I am going to study that particular part. So here we are going to study it as a line officer. Again, in a line officer, your entire functions are classified broadly into two categories. First is managerial functions and second is administrative functions. So let's take first managerial functions. The first point is financial planning. So the financial planning is basically done by the finance manager. Now I guess by now you are well aware like what is included in financial planning. First of all, it is planning for the future, fine, projection regarding capitalization. It is estimate amount of capital required in order to fund any particular project. Second is sources of capital. That is from where you are going to borrow your funds or where you are going to invest your fund. Whether you are going to use your own equity or whether you are going to take loan from the banks. That is basically sources of capital. Third is determining about the cost of capital. As I have told you, if you are borrowing from banks, then you may evaluate the proposal given by the different banks, because there may be a bank X who is lending you at the rate of 10% and there may be a bank Y who is lending you at the rate of 9%. So you need to do negotiations with the banks and come at proper cost of capital. Fourth is policies. That is how to manage funds and how to utilize funds in a business is being determined of. The rules with regards to same are being framed by whom? By the finance manager. And last is standards. Standards is basically you set a benchmark on the utilization of the funds, that for particular activity this much amount should be used. Why? Because at the time of financial controlling that we are going to take up in the upcoming points, it is necessary to have a predetermined standard, because if you have set something, then you will be able to compare your actual performance with respect to same. So the first point that is performed by a finance manager under the managerial functions is financial planning. Second is financial organization. This is nothing, this is the entire structure, like who all are the officers who are working below the finance manager to perform a proper set of functions. We are going to deal with this entire chart in the next slide. So as of now, I am skipping this particular point. The third one is financial coordination. Whenever you are running a business, it becomes necessary that there should be a proper coordination among your various departments, like marketing department, human resource department, sales department, production department, etc. Now, you need to maintain an interdepartmental coordination. So finance manager takes utmost due care that there is a proper coordination between each and every departments. And for that, he used the technique of budgeting. That is, finance manager is the one who is basically going to decide about the finance that is going to be used by each and every department. So what does he do is, he set a budget for each and everything, for each and every department, as a result of which there can be a smooth functioning and spending by each and every department. As a result of it, this is the third managerial function being performed by the finance manager. Next point is financial control. Now, I hope you all know what is controlling. The same way, if I'm controlling my finance, it is known as financial control. In controlling, what do you have studied? First, it was you are setting the standards. That is, you should have certain benchmark. That is your set down standards. Second is you will check your performance. What you are going to do? How you are performing. Now, in this particular case, you are going to use certain techniques like ratio analysis, cash flow, fund flow, etc. So what I am doing basically, I am evaluating my present performance. First of all, I have set the standards at the time of planning. Second is I have evaluated my performance by using various financial techniques like ratio, cash flow, fund flow, etc. Third, what I have done is I have compared my actual performance with the standards that I had set, and I found out the deviations, if any. And at the end, what I would do is I would take the corrective actions. So basically, this is the process. This is same as we have studied in the case of controlling. But whenever it comes to managing or controlling the funds, we term this process as a financial control. I hope I'm clear with all the first four functions. First was financial planning. This is determining everything like paisa aayega kahan se. And second was with policies and standards. Second was financial organization. That is nothing. It is a structure in order to achieve your financial target. Third is financial coordination. That is coordinating amongst various departments with the use of technique called budgeting, that is preparing budget for each and every department. The fourth one is financial control. It is same as we have studied in case of control. Next functions are management of working capital. As I have explained you in the previous slides, what is working capital? That is current assets minus current liabilities. That is the fund that I require to carry on my day-to-day or the routine function. Now, basically, what is my major focus as a finance manager is my major focus lies on three important tools. First is managing my cash. Now, you all know you require cash basically for three important functions. First is transaction, that is day-to-day आप जो भी काम कर रहे हो उसके लिए. Second is precautionary motive, that is in case something comes up, some contingency comes up, you should have a provision with you so that you can easily face that particular challenge. And third is speculative motive, that is sometimes you feel that there is an opportunity in the market, so if you are having sufficient ample cash in your hand, you can easily encash that particular opportunity. So finance manager try to maintain adequate amount of cash to solve these three particular purposes: transaction motive, precautionary motive, and speculative motive. Second part is managing your debtors. You all know it is quite difficult to manage your debtors because whenever you are engaging yourself in a credit sales, there are fair chances that it may result into bad debts. So you need to continuously monitor about the performance and the business of your debtors also, so that you can ensure yourself that yes, your funds are not blocked. You are going to timely receive the funds that you have lended in form of credit sales. And the third one is stock or inventory management, under which I'm basically going to focus how should I manage or control the cost of storing my stock or storing my inventory. See, because you know, whenever you are storing anything, there is a risk attached to it. Like it may get stolen, it may get perishable, it may get being threat because of any reasons. Like suppose वहाँ पे आग लग जाती है, then again you are having a threat, you are having a risk. So you need to take appropriate insurance for this. So basically it is not so simple as it sounds. You need to take utmost good care in order to manage your inventory as well. Like for example, there is a technique that I will be dealing probably, but it is known as ABC analysis. Now ABC analysis basically talks about you are going to divide your entire stock into three categories: A, B, and C. Now, what is A category? It is minimum in quantity but maximum in value. For example, I am having 10 different types of coins. One coin is of 1 lakh rupees and one coin is also of 1 rupee. Now, as a storekeeper or as a warehouse keeper, मेरा main focus कहाँ पे रहेगा? At the coin of rupees 1 lakh. Yes. As a result of which, what I am doing is under A category, I am keeping minimum quantity but with a maximum value. So मेरा 70% focus कहाँ पे रहेगा? वहीं पे रहेगा. So basically there are different techniques that we deal with at the time of management of stock. See, basically this all are not a part of your syllabus in this particular question, but this is just for your general knowledge. What you guys are supposed to remember is management of working capital, and the major areas which are covered over here is management of cash, management of debtors, and management of stock. Next is management of fixed assets. As I have told you, fixed assets are for a longer term, as a result of which the technique of capital budgeting is being used to evaluate which fixed assets should be purchased at what price, etc. And the last one is management of earnings, which basically includes tax planning. That is, you need to determine various scenario under which scenario you will be benefited and you can save your tax. Second is dividend, how much dividend you should give so that your shareholders feel that you are doing and utilizing their funds in an appropriate manner. And third is determining the appropriate amount for retained earnings so that you can plan about your future growth. This all are the managerial functions of the finance manager as a line officer. I am not going again in detail because I hope it is clear. It is something that you keep on studying in the management fundamentals. These all are the same points, but now they are looked upon as a financial viewpoint. Fine. Let's take a quick look at the organization of finance department. Now, when I talk, I am having a finance department in my organization. Who is the main chairperson? The chairperson is financial manager. He is going to lead the finance department. Now, basically, his entire transaction is being divided into two parts. One is role as a treasurer and second is role as a controller. Let's see, as a treasurer, what all are the position or which officers work under this particular department. First is cash officer. What is the major role of this person? He is going to take care about the cash receipts and cash payments. Second is credit officer. He is basically going to focus on the credit sales. Fine. So whenever you are giving credit to anyone, he is going to monitor that particular credits. Third is portfolio officer. He is basically going to look after under which assets you are investing your funds. So he is basically talking about the investment part. Next is fundraising officer. He is just continuously going to evaluate which sources of funds are going to be more beneficial to you if you borrow funds from, and he continuously monitor the changes in the cost of capital so that you may take the advantage of the lower cost at every point of time. And the last is capital budgeting officer. He evaluates the various investment proposals that come across to you. So basically, these five functions are the functions as a treasurer. It falls under the Department of Treasury. So whenever I'm talking that I am having a finance department in my organization, the main person is financial manager. Further, it is divided into two departments: treasury department and control department. Under treasury department, these are the five different officers who perform. Now under control department, first is financial accounting officer. This particular officer basically looks after day-to-day recording of your accountancy. So each and every transaction you are incurring, it is being recorded and maintained properly by the financial accounting officer. Second is cost accounting officer. He is constantly involved in determining the cost per product, as a result of which he can determine how much finance is going to be utilized so that he can accommodate the manufacturing of each and every product. So what is his main role is to determine per unit cost of each and every product that I am selling. Third is taxation officer. He basically looks after the taxation matters, which avenue is going to be profitable, and he plans tax accordingly, like deciding upon how much to give as a dividend, how much to retain is also being taken care of. But his main focus is on the taxation planning. Fourth is data processing officer. This person, as of now, is one of the important person in current era. Why? Because he is dealing with the data, all the management information system, each and every data is lying with him. What he does is he does data analysis and processes each and every data which is available with him, and he tries out to find certain areas which may turn profitable for a business to invest for. And last is internal auditor. His work is basically to cross check each and every transaction which are being incurred in the department. So he basically looks after examination thing. That is, he is examining each and everything, whether everything is in place and it is being performed in a way it was supposed to be performed. So friends, this is nothing. This is the organization of the finance department. I would just request you to take a quick overview on this particular slide. Well, I hope you have gone through properly through the organization of finance department. Let's move to the last topic for the day. It is functions as a line officer itself, that is as a head of finance department. But now we are talking about the administrative functions. First were the managerial functions. These are the administrative functions. Like what are the small administrative functions that are being performed by the finance manager? First is maintenance of proper books and accounts. Finance manager needs to maintain each and every financial information with respect to accounts. So you need to see that proper books of accounts are being maintained as it is necessary from the viewpoint of a particular business. Second is look after the accounting work. You need to ensure that a proper accounting is being done for each and every transaction which is taking place on a day-to-day basis. So second function under administrative head is accounting work. Third is control over cash receipts. That is, he need to keep a continuous watch and a deep control on each and every receipt in form of cash. That is, for example, he is receiving cash from the debtors. He need to see that it is properly accounted, and secondly, it is being properly kept in the cash vault and properly taken care of. So he need to ensure that the cash that are receipts in a business are being properly maintained and is being already tallied with the books of accounts. Fourth is payment of cash. He also needs to look after that the payments of in cash are being done in an appropriate manner and on a timely basis. There should not be any delay, and at the same time you should manage advance payment also. So again, he is the one who is responsible to look after the payment of cash. Next is preparation of bank reconciliation statement. I hope all of you know what is bank reconciliation statement. It is basically reconciling your bank book that you are maintaining along with the bank statement or the bank passbook which is being maintained by the bank. What you are supposed to do is you need to prepare a statement of reconciliation, because due to certain timing difference there may be some entries which are recorded in passbook and not recorded in cash book, or vice versa. As a result of which you need to prepare a bank reconciliation statement, which is also a job role of the finance manager. Next is maintenance of important documents with the safety. Now, you know, when you're dealing with finance, there are certain important documents. For example, the papers of equity share capital, the certificates of deposits or debenture certificates, etc. Now, these documents are of highly concern from the viewpoint of finance department and from the viewpoint of management. As a result of which you need to maintain them with a new safety. There should be a proper lock and key system under which these documents are maintained. So again, it is supposed to be looked after by the finance manager. And the last point I've written over here is maintenance of financial information and financial reporting. Finance manager needs to maintain each and every kind of financial information so that whenever there is a time of decision making, he can serve ready to use information. And at the same time, at the periodic intervals, he should report to the top management about the functioning of the finance department. So this all are the routine or the administrative functions which are performed by the finance manager as a head of financial department. With this, I declare this answer completed. I hope you are well aware and totally clear about what we have discussed today. The question was role of finance manager, under which broadly we have seen his function as two officers. One was as a staff officer, as an expert that board of directors takes his advice on several decision making process, and second is as a line officer. Under line officer we have seen again two categories. One was as a managerial and second was the administrative functions. With this, I, CA Pujan Kapadia, thank you all for your patient listening and hope to see you soon in my upcoming lecture. Thank you, friends.